Let's pull in our banking expert from the University of Hohenheim, Hans-Peter Burghof. Thank you very much for coming in today.
Sure.
As we heard there, Italy has a perfect constitution. There's nothing wrong with it.
My God. Yeah, I mean, if you look at Italy, the strong point has always been the corporate sector. They've got great entrepreneurs, great products, long tradition of that. And the weakest point has always been the state. So they must really rethink their state. They must have responsible government, which includes both responsibility on the one hand. So if you make mistakes, you must be thrown out by the voters. And on the other hand, government. The government must be able to act because otherwise there is no development. For sure, the biggest break on the Italian development is corruption, inefficiency in the government.
So the worst case scenario this weekend could be more political instability. Is that what you're saying as well?
Yes, for sure. And this has big consequence. As we know, it's one of the core elements of the European Union. If there's no advancement in Italy, we just don't get from the spot. And we might be even driven backwards politically because then more of the forces who are against European Union, more European Union, will become stronger. So it's a great risk. So we must have advancements in Italy, but this way we won't get that.
What about the small guy in Italy trying to start up a business, like we heard there? What's going wrong? Is it the system? Is it the banks? Is it the states, the governments?
Yeah. Well, the starting point is all right in Italy. So there's a lot of, as I said, entrepreneur culture, and there are many young companies. There are centers where they develop young companies. But if you grow, you need support. And the European Union would say it's no problem, just go to the capital market. But for small companies, it's more important to have a bank behind you, which supports you in your growth process, which gives you advice and money. And the Italian banking system doesn't work. That's a clear point. The Italian banking system is going deeper into a crisis, and it can contribute to this development. That's our actual situation.
If this weekend we do get a yes in Italy, what are the chances then of reforms actually being enacted?
Well, they are much better because the decision process will be less complicated, but still we need the votes for that. And we've got strong trade unions who are against this. We've got some separatists in Italy who are against this. We've got some socialist movement. We've got some populist movement like Trump-like parties in Italy. So this doesn't mean we are through. It just means we've got a precondition to get through somewhen, somehow.
Is the Eurozone in trouble if Italy can't get its act together?
It's in deep trouble because it's one of the core members. The other core member, France, is likewise in deep trouble politically. So it might be a next step to a breakup of the European Union. And the probability that this could happen is much bigger than we would have ever thought it could be maybe 3 or 4 years ago.
And just briefly, the debt situation in Italy, the banks, how bad off are the banks at the moment?
Well, the banks are invested mainly in state, well, not mainly, but to a high degree in state debt. The state is deeply indebted still. And so I'm afraid there's no advancement in this respect.
OK, let's get back to that in a moment and focus on debt for a bit. We'll return to you in a moment, Mr. Burghof. The German term for debt, of course, is Schulden. It has very negative connotations, in fact. It comes from the word guilt. And if you're in debt, schuldig, you're guilty. But should you feel all that bad about making debt work for you as an investor? Here's a look at the pros and cons, whatever you call it.
How dangerous is debt? It causes people to lose their homes and states to go to war. Debt can be a matter of life or death. At first, debt just exists on paper. Anyone taking out a bank loan signs a contract promising to return a borrowed sum plus interest. But if you default on your mortgage, for instance, the bank will repossess your home. Borrowing to pay for a car, a home, or a holiday is especially risky. You're safer, for example, if you make money you've borrowed work for you by taking out, say, a mortgage on a property you then rent out. An entire financial industry has been built around buying or selling debt securities. Speculators even place bets on whether entire countries are in danger of going bankrupt. Nations whose debts exceed their entire economic output, measured in terms of gross domestic product, are viewed as high risk. National public debt in the Eurozone states is supposed to remain under 60% of GDP. But in many countries, it exceeds that, which erodes investor confidence. Investors and lenders respond by demanding higher interest rates due to the increased risk of default. And a state in crisis constantly needs new loans to refinance the old ones. Before long, no one wants to lend any more money to debtor nations like Greece or Italy. And bankruptcy looms. But states need the money to kickstart their economies by building roads and schools, for example, and investing in the future. That helps create jobs, increases tax revenue, and ultimately could bring a state back into the black. So debts can have a positive effect as long as they can be repaid. But gross debt levels worldwide have more than doubled since the turn of the century. Governments, firms, and households now owe a grand total of around 280 trillion euros. That's 3 times greater than global GDP. So who is going to pay it back?
Well, let's see if we can find out from Hans-Peter Burghof. Among the top economies, we were talking about global debt, households, also governments. Which governments are handling debt the best or the most effectively, would you say?
Well, I should be in favor of Germany because we really want to pay back our debt. However, the other countries have a more lenient behavior towards debt, like the United States, for example. Both are working systems. They work very well in the United States. Many things are based on capital markets, so you can inflate debt in the end, and you can use debt very good to improve the speed of growth of your economy. In Germany, we've got a more stable approach. What doesn't work is if you combine the two. So, for example, the Italian model, on the one hand, banking-based system, so banks are very important in Italy. On the other hand, a great lenience with regard to paying back debt. And this doesn't work.
OK, so pick one or the other, but nothing in between.
Yes.
What about the Italians, and what about the situation right now? I believe you said that we're heading towards another financial crisis, but one that could be even worse than the last.
Yeah. I'm afraid it's so. The Italian banking system, they've got big bad debt on their balance sheet. And even other countries, the same problem. We've got an extremely costly regulation by European central banks of banks today. And this leads to a situation, especially in Germany, that our banks likewise have great cost for regulations. They're very inflexible today, and they can't make money in this way. For in the long run, many of the German banks will come to the end of their teaser very soon.
Isn't the ECB aware of all this?
I'm not sure about that. I mean, the consequence of financial crisis is that the banks are always the bad guys. You have to punish them because otherwise you would look into the mirror as a politician and say, I was responsible as well. You don't want to do that. So the banks must be responsible. So you can do everything, any kind of regulation against banks. And so they create an immense volume of regulation. It's doubling almost every 2 or 3 years. And
I mean, until the financial crisis hit, the banks had it pretty easy, didn't they?
No, they didn't. There was much of regulation as well, but the quality wasn't good enough. And some of the larger banks, to some degree through lobbying in the European Union level, did get around it. And that was a big problem then. I don't think we need more regulation. What we really need is better regulation. It's a question of quality, to find the right points in regulation.
But not just better regulation, also better practices.
Yeah, for sure, but then you need to enforce it. So you need something like an independent regulator. Unluckily, the ECB as a regulator is not independent because the ECB is at the same time the monetary institute and the regulator, and this doesn't combine very well.
So you wouldn't say it's stepping up to the plate as far as its role as banking supervisor goes?
Well, they were very helpful maybe to build up an international supervisor, but now we need 2 things. First, we must have a real restriction. What are they responsible for and what not? They expand the responsibility to everything, demand information from everybody, and that's extremely costly. On the other hand, it would be a good idea, following Mr. Schäuble in this respect, to have just get them out of the ECB into a separate institution because they need independence to do their job in a proper way.
OK, you heard it from Hans-Peter Burghof. Thank you very much for coming in today.
It was a pleasure.